Hi everyone, welcome back to Bearish. Happy Saturday. Saturday evening. You must be getting ready to go out, have some fun and relax, and you do deserve it. It's been a tough week for investors, especially those of you who make a living in the market. This is going to be a tough year for those of you who make a living in the market, meaning you trade in the market. Traders are going to find this next few months really tough, and there's reasons behind it. Those of you who thought maybe there's a relief rally and happening and things are going to turn around, that doesn't seem to be happening. And that's what I wanted to talk about today, to kind of give you an outlay on what mindset you should have as an investor, that too as a value investor, playing out for the month of March and probably into April. The recent relief rebound which we saw didn't really hold long, and it's very temporary, this bounce. Because the main reason is there's a lot of bearish sentiment in the market, and this sentiment can be usually measured by positions your foreign portfolio investors are taking and also by the positions our domestic investors are taking. That kind of gives you an idea on where the market sentiment is and where Mr. Market seems to be heading. Most people who are in the market are of the view that the support levels for Nifty is around at 22,000, that it will not go below 22,000, though it did breach it briefly mid last week, that it broke 22,000, but then it was pulled back up very fast, back about 22,000. So it's been range bound in 22,000. Will it stay in 22,000? Is the support level really true or not? I really cannot say, because I really don't believe these kind of metrics when you look at it. What does give me a lot of understanding and information is how people are basing their positions in the market. That gives me an idea on what they feel. That is more valuable to me than these so-called support levels and resistance. These support levels and resistance really cannot hold much water, is what I feel. There are people in the market who are seasoned investors, and they even are reflecting the same sentiment in the news and media channels. If you see, they're saying that you should be very selective in the stocks you decide to invest in. Most of them are also saying the same thing what I'm saying, that this year may be very hard to really see huge profits like you saw in the previous years if you are making a living in the market trading. That means buying and selling on a regular basis. There has been shift in ownership in the stocks in the market. For the first time, individual investor ownership in the NSE has overtaken foreign portfolio investors. That means individual investors, retail investors like you and me who are listed in who are buyers in the NSE market, our total percentage of ownership has overtaken the foreign portfolio investors. There's two ways to read this. One, more and more Indians are participating in our economy, so that is good. That is good news. At the same time, more and more foreign portfolio investors are withdrawing from our market, which is also not good. But what you will see changing very slowly is the huge volatile swings we used to see in the past 10 years ago, 15 years ago. Those kinds of market swings you may not see as often as before. Meaning when we saw a bear market and it's corrected by Nifty corrected by 30%, 25%, may not happen in going forward as such, because more and more domestic investors are buying into our equity market. So if there is a drop in the Indian equity market of 30% in a short span of time, that means even domestic investors are losing faith in the economy or faith in the country, and they're withdrawing from the country, and that will lead to a lot more introspection than just mere market movements. So I don't think that will happen in that kind of volatility you will see going forward as more and more domestic investors are partaking in our markets. But despite all this, the short positions taken by the foreign portfolio investors in the Nifty and Bank Nifty have gone up. There have been net sellers in the cash segment, but they are also net buyers in the future and options positions. What is that telling you? That means the FIIs net sales in the secondary market, they have sold 21 trillion rupees in the secondary market as of 5th of March. While there are short positions in the future, they are holding positions of almost 174 contracts in the Nifty and the Bank Nifty. This is what the NSDL says. But if you equate this quality of these positions, there is something known as a long-short ratio. That means the long positions you've taken in the market divided by the short positions. That ratio usually tells you the sentiment of the market. If it's above 1, or the percentage is above 100, that is, then it is considered that the sentiment is that it's a very bullish, and if it's below that, it's considered to be bearish. That is the usual thing. And if it's at 1, that means it's a neutral view towards the market, is what most participants, meaning people who are betting on the market, have a neutral view. That has dropped from 70 to 80%, the FPIs from September 2024. It's dropped down to almost 18%. That drop shows that there's really a lot of bearish sentiment, foreign portfolio investors in India, and most of the contracts they're looking at are short positions, and they're not looking at long positions. and they're looking more and more bearish at the Indian market. So that shows you at every point we have a so-called relief rally, the foreign portfolio investors, the FIIs, are going to sell into it. That means every bounce, sell. Anything that goes a little green, they will sell more into it. Why is this happening? Maybe a question a lot of you are wondering. That's because of the US tariff. In short term, these problems are there. The US tariff is one of the short ones. The earnings in Indian corporates have not been good thanks to our economy. The US bond yield going up, that has been another reason. That means foreign portfolio investors can get better return by investing in US Treasury. And the Fed doesn't look like it's going to be cutting interest rate any time soon because of inflationary pressure in the US. And the dollar index is peaked at 109.95 on 13th Jan and is holding around currently at around 104. It went from 100 all the way to 109, then it dropped down and the RBI did some corrective movement with the rupee and dollar. And now it's holding at around 104, which is offering some relief to importers in India, but that in case it doesn't help companies that are exporting like IT from India. Meanwhile, this is what the foreign portfolio investors are feeling. The domestic institutional investors, on the other hand, are very bullish on the Indian market, and they have around 56,000 contracts, and most of them be net long position, meaning they're feeling very bullish about the Indian market, which is understandable. Mutual fund houses and insurance companies in India need places to invest, and anytime foreign investors are willing to go on a fire sale and sell anything, most domestic institutional investors are looking at that as an opportunity to buy, and they are buying. But this is just a mere bounce. As Anand has been saying, this kind of pain is going to last in the short term, at least for a few more months, before you can even think about anything else. How far will it go down? It's very difficult to say. Where is so-called the bottom? No one can predict that. Anyone who claims to know where the bottom of the market is, they're either a genius or they're a fool. And I don't want to be either. I don't claim to be one genius, and I definitely don't want to be quoted to being a fool. So I'm not going to predict where the bottom is. All I'm going to say is there is more volatility in the coming weeks. Being Saturday, I thought I'll share this information with you. And starting Monday, wherever you see opportunities, buy in limited. As all advisors, investors are saying, buy in limited amounts each day. Keep it simple. Don't get it complicated. Be stock specific. Don't be sector specific. Look at specific stocks which you understand, businesses you know. Invest in those in small amounts incrementally for the rest of the week or rest of this month is what I would say. If you are a very seasoned person and you know what you're doing, even there I would say be careful and cautious investing in this current market. Thanks for watching the video. As always, I do wish you a wonderful Saturday evening, and be careful as you enjoy your revelries out there, and stay safe. And tomorrow evening I'll see you again to give you some more motivation, maybe talk about something specific in stocks, because Rupesh wants me to be something very specific on the stock front. So maybe something Rupesh will give me on a specific company or a specific patas list item, which I'll try and talk about tomorrow evening. Look forward to that, and nothing more else to say. Have a wonderful evening. I'll see you again tomorrow. Bye.